This is the briefing for Friday, September 19th. As I've said during the weekday briefings, this market, this rally is really looking very, very tired to me, and it gives me a little bit of concern over the potential for some type of negative news that may come into the market and just really give us a major correction in this market. But at least until that happens, the trend is up, and we have to respect the trend. Now, this is what I'm talking about. You can see the rotation here, then we get a little bit higher move on yesterday's trading, and then rotation, then a move down, breaking through the 61.75 area that I set as short-term support. But then it was completely retraced this morning in the second hour of trading, and then we got this move back up to test the high of yesterday. A little bit different in the Qs. You can see the rotation, the gap up, the rotation down, and then of course the move to take out the high. So the Qs, or the NASDAQ, was a little bit stronger. And then just opposite that is the Russell, that had a pretty, not a very good day yesterday. And you can see that it was basically in rotation right around this right above the 243.75 area. And then of course today we opened up higher, and when we got this retracement back down, follow through, and then rotation just below the 243.75 area. You know, the internals just are not that strong. This is S&P breadth, 77 negative shares, 77 shares negative, and you can see the divergence that's occurring. Look at the NASDAQ. This is the Qs in today's trading, going higher, testing this or closing at 599.46. Look what's going on with NASDAQ breadth. It's collapsing. Negative 810 shares, negative in the NASDAQ. And basically the same thing in the Russell, the IWM. Russell breadth was negative 1,200 shares. You can see, look what's happening with net volume, how net volume is just really not looking very positive at all. The internals of this market are just giving me great concern. The price development and the struggle to move this market higher is giving me great concern. But you know, unless or until something changes, or we see some type, or at least short-term support levels beginning to be broken, the trend is up, and we have to respect that. Now, one of the things that's happening, I think, in the NASDAQ is this is a chart that I have of the this is the spiders. This is the weighted index. The spiders are weighted with the stocks in the S&P 500 that are higher weighted. And this is the equal weighted ETF, RSP. This is the Qs, which is a weighted index, and this is the QQQE, which is the equal weighted, where all the stocks are giving the equal weight, not separately as in the other indices. So you can see what's happening here. You can see this trend is going higher. You can see this is flat, just this rotational pattern right through there. You can see this move here, and then you can see this move here. Now, we did get over yesterday and today in the NASDAQ, we did get a move testing or rotating right around this high here. But in terms of what's happening here, you can see the move higher, whereas we're just testing this high. This high came in right on 729. So we'll go back to 729 here, and you can see right there, that's 729. So you can see the difference, how this has moved higher, and this has really not gone anywhere. So giving a lot more credence to the higher weighted stocks in these indices. So basically, I'm still going to be keeping this 661.75 level as initial support in the spiders. We did get a breakthrough, but it's a false breakout. It was completely retraced in the next hour. I'm going to be looking at 393.25 as support, and then in the Russell, I've got 243.75 as resistance and 241 as support that I'll be looking at in Monday's trading. Now, looking at a little bit longer term, you can see this is the spiders on a daily basis. So you can see the move higher above this 652 or 650 area. Spider volume just basically flat, but look at this. This is just unreal how we're getting this divergence in market red, and absolutely in today's trading net volume. I mean, in the this in the NYSE, look how negative that was. That's just really just incredible to see the indices holding up at this point in time. Now, I also want to say that, if we're looking at individual stocks, individual stocks are moving higher also, at least the majority of them. But at some point in time, when the indices themselves begin to turn down, it's going to hit all stocks if and when that begins to happen. Volume in the queues falling off today, breadth in the queues falling off today, and net volume falling off as well. NASDAQ certainly is showing a little more strength than the other two indices that I track. Russell made testing yesterday's high, volume basically flat, breadth in the Russell just absolutely collapsing, and so is net volume. It's just really very interesting to see this happen. Now, in terms of overbought and oversold, we're basically neutral. We were approaching an extreme overbought condition in the NASDAQ, but it has worked that off in today's trading. And so we're basically neutral there as well. Looking at total volume in the indices, this is option expiration day. I think it was triple witching day or quadruple witching day. So we got a skew in the volume here. This is NYSE volume and this is NASDAQ volume. But I think the real key here is what happened with net volume. So I forgot that I wouldn't have shown this chart if I remembered that it was quadruple witching day. So basically, I also want to talk about what's happening here. This is the S&P 500. This is the percentage of shares above the 50-day moving average in the S&P 500. And you can look and see what's happening with this divergence in terms of what's happening with price development. This is the percentage of stocks above the 200-day moving average in the S&P 500. So you can see what's happening there in terms of what's happening with price. So there's a real deterioration that's beginning to enter into the indices themselves. This is the NASDAQ percentage of stocks above the 50-day moving average. Now, recently you can see this trend here, but if you look at from here to here, you can see the divergence that's occurring as well. Not so much in the 200-day moving average. So this average is going to take a little bit more time for this to have an impact on this, since this is 50 days and this is 200 days. And in the Russell, we're looking at basically the same thing. We're looking at flat percentage of stocks above the 50-day moving average while price is moving higher. And then, of course, we got the same thing as in the NASDAQ. We got 200-day moving average is it's going to take a while for that to reflect what's happening in the 50-day moving average. But the most concerning, I think, for me is what's happening right here. This is dramatic to see the percentage of stocks above the 50-day moving average declining as much as it is, at least at this point in time. So basically what I'm looking for on Monday is I'm cautious to the upside of this market. I keep saying that, and I'm could be wrong. I mean, the trend is proving me wrong, but at least for right now, I'm very cautious to the upside of this market. I'm going to be watching the spiders below 661.75, the Qs below 393.25, and the Russell, as long as it holds below 244, 243.75. Next level of support I've got coming in around the 241 level. I think those are going to be important areas. If price continues to move higher and the internals do not strengthen in this market, I have great concern that we may get a surprise one day with a pretty large gap to the downside. But that's yet to be seen. Now, the last thing I have here is that during the week I talked about, this is Cisco CSCO, and I talked about the fact that there's basically two potential patterns that are developing here. One is a head and shoulders top. You got a shoulder, a head, and another shoulder. This is the neckline at 66. Breaking 66 would suggest the potential for a 7-point move to the downside, which would bring it down to 59. So that's something I'm watching now. It's a head and shoulders top. Yeah, it looks like it, but it's really not a head and shoulders top until it breaks the neckline and we see the move to the downside. The other potential that it is that this is a rotational pattern here, typical rotation, typical pause, we had a false breakout for 4 days. This is a daily chart, 4 days of a false breakout, unable to go any higher, and rotation back through the range. Then another move higher, another move lower, and then this looks like it we're going to see another rotation back, potentially to test this 70 area. Now today I happen to be long Cisco because when it didn't break 66, I thought, well, you know, it's a low risk trade if you buy Cisco right here, and I do trade options in it, so I should clarify that as well. That, you know, once it breaks 66, then, you know, you're wrong in that analysis, so that you want to be out of it below 66. At least this is my strategy with it. Then today I was a little concerned because when it opened, you can see that we got this fairly big move to the downside, but I sat on my hands and was patient, and we got most of it recovered in today's trading. So it's going to be interesting to see if this rotational pattern, this rotation continues to move higher and test the 70 area, or whether this is done and we're going to see another rotation back down to test 66. But as long as it's above 66, we're in the rotational pattern. Breaking 66 makes it a head and shoulders top and potential for a fairly good move to the downside. So keep an eye on Cisco. It's going to be interesting to see which of these patterns play out over the next couple of days. Have a great weekend, and I'll pick this back up on Monday for subscribers.